think that the drop in the interest on excess reserves is going to be taken as a sign that the Fed is moving towards a rate cut. And I think that's a mistake. The two are separate, but I do think the market will take that as a positive sign that the rate cut it wants will be happening by the end of the year.
Even though you think it's wrong for them to take it that way.
Even though I think it's wrong to take it that way. And I think, actually, if you look at what's priced into markets, the risk is on the other side. So the risk to your asset class is that, in fact, you may get inflation down the road and you get a rate hike. And so that's what markets should be worried about.
Totally. The banks, by the way, Paul, were coming into this. The financials were having their best month in a couple of years, 8 or 9% rally. The yield curve had just started to steepen again. We'll watch and see how it continues to react to all of this. Chair Powell's coming up at 2:30. How does he need to describe the landscape for the Fed?
I think it's going to be a difficult press conference for him because the underlying reality is that inflation is below target. In fact, I could have said that any time in the last 10 years. And so you reach a point where it's difficult to dance around that issue. I don't think he wants to signal that they're going to cut because of it. And he may, and this is just, amusing, talk about the strategic review that the Fed is conducting for the entirety of 2019. The Fed's not unaware of this whatsoever and are doing a major strategic review. And so, therefore, that provides his cover not to get deep into the weeds.
Yeah.
Well, go ahead.
No, I do think they've made a mistake here by not putting some flag in the ground about asset prices because now he doesn't really have a good defense.
Asset prices, they would talk about that if they felt like they were really getting frothy. So after Trump was elected, early part of January of last year, we were crashing through 1,000-point intervals seemingly every 10 days. What makes you think that this environment, just because we've recovered the losses from the fourth quarter, falls into that category?
Well, I think if you look at the overall ratio of asset prices to GDP, it just keeps on rising and rising and rising. I mean, this has been going on for many years. And we've also got, of course, now potential an infrastructure bill, deficits going up. I mean, we still have a lot of stimulus going into this economy. And I think the Federal Reserve really needs to give a rationale, and he needs to give a rationale for why the Fed doesn't move rates, because now there's going to be more political pressure. Look, you say there's no inflation, cut rates. But if you keep on cutting rates, which are already very low in real terms, you're going to cause asset prices rise some more. Now, of course, I work for an asset manager. We like to see asset prices go up. We just don't want them to go up so fast that eventually they crash, and that's what we worry about.
Steve, do you think that will be a theme or a question in that press conference in 25 minutes?
I think so. I think asset prices are an issue. I mean, I think the Fed has sort of said, and the economics community more broadly has said that asset prices are not part of its inflation calculation. I can get into why that is, but they don't feel like that's an important component from that side of the monetary policy thing. But what I think might be a little bit missed in this discussion, though, is we've sort of checked a pretty important box on the way to cutting rates. I don't know how close the Federal Reserve is, but if you were to make a series of checklists there about what the Fed might need to cut rates, well, you'd have to check the box of headline inflation being below 2%. And then you'd have to check the box of core inflation being below 2%. That's the box we check today. I don't know how many boxes there are precisely. It would be a little hard to say the Fed is going to cut rates amid the stronger growth we've had and the strong jobs growth. And one of the questions I think that's going to be out there is, does the Fed think it needs some kind of insurance rate cut as it did in 95, 96, or something along those lines? But it shouldn't be lost that we've checked one of the boxes. If you're wondering which way the Fed was leaning, if this core rate remains below 2%, it's going to nudge the Fed a little bit more towards the rate cut idea than the rate hike idea.